Welcome back to Alpha Recap. Juniper here. We're walking through the market moves from today's session, which wrapped up with some clear rotation and a few loud single stock stories. As always, if you have questions, you can reach us at stockalpha.ai.
Great to be here. Lots to unpack from the close. Tech took a hit, SPACs made headlines, and macro signals were a little mixed.
Let's start with the indexes. The broad market closed down, with the S&P finishing the day down about 0.6%. The tech-heavy Nasdaq fell more sharply, down about 1.9%. And small caps lagged as well, down roughly 0.8%.
Right. And the other thing is, those moves framed a day where sector rotation mattered more than a straightforward macro push.
So, what really stands out here is those cross-market signals. Treasuries slipped and oil dipped below $80, which, in theory, should help growth. But instead, we saw concentrated profit-taking in mega-cap tech and AI-linked names.
Yeah, that tracks. Lower yields usually ease financing costs for long-duration names. But headlines, from AI policy chatter to communications updates, pushed traders to take chips off the table in the biggest winners.
Can you explain that a little more? Why would tech fall when yields fell?
I mean, when you step back and look at this, lower yields are one input. They make future earnings less discounted. But markets aren't mechanical. Rapid gains in AI stocks created some tactical profit-taking, and fresh regulatory headlines amplified the move. So it wasn't a pure bond story. It was sector-specific rotation on top of a macro backdrop.
Got it. Let's walk through the sector winners and losers. Tech and communication services led the downside, right?
Exactly. Those sectors were the biggest drags because they've been leading into June. Analysts called it a classic consolidation after a strong run. Basically, traders trimming positions.
Not a great day for chip and platform names then.
Nope. On the flip side, materials and mining caught a bid on renewed interest in rare earths and exploration. That was tied to demand for critical minerals used in AI hardware and electrification. Supply security stories.
Utilities and renewables also did better, correct?
Yeah, absolutely. Utilities showed some defensive strength as news of faster renewables and storage rollouts surfaced. Investors leaned into stable earnings when headlines were driving volatility.
Energy was mixed. Oil under $80 was a headwind. But some names held up on deal chatter?
Right. Oil's slide under $80 was tactical pressure on traditional energy stocks. Still, company-level stories, like M&A rumors, gave a handful of midstream names something to hang their hats on.
Big move.
Not what anyone expected.
Let's highlight a few individual movers. SPCX absolutely popped, up nearly 20% on heavy volume. That was one of the day's biggest headlines.
Honestly, I was a bit surprised by this one. SPAC-related momentum showed that even in a risk-off-ish session, speculative rallies can steal the tape.
And there was a SpaceX-related name that rose about 11% in pre-market action, which grabbed attention even if it didn't translate the same way across the full session.
Yep, we also saw an AI data center hardware supplier jump on a reported partnership with a major chip maker. Those idiosyncratic winners keep the theme alive even as the broader tech complex pulled back.
Coinbase-related flow and renewed Bitcoin demand helped a few crypto-adjacent names, too. So crypto wasn't a complete drag.
Correct. Crypto-led stories were mixed, but a differentiator for certain mid-cap fintech and exchange names.
Moving into macro. Treasury yields fell and oil slipped. Walk us through the Fed implications of those moves.
Lower yields ease financial conditions, which, in theory, gives the Fed more room. Analysts noted that if yields stayed lower, the Fed might feel less pressure to tighten, but the central bank remains data-dependent. Without fresh inflation or jobs numbers, Fed speak and upcoming releases will dictate how traders interpret these moves.
So basically, yields were supportive, but headlines dominated equities.
Exactly. Bond market calm didn't translate into a full risk-on day because headline flow, AI rules, media delivery changes, SPAC hype, drove most equity moves.
Let's talk breadth and technicals briefly. The session looked like consolidation after the AI-fueled run, right?
Yes, QQQ had a sharper drop relative to the S&P, which pointed to profit-taking in mega-cap growth. Breadth weakened as leadership narrowed. Traders watching momentum indicators said this could be healthy consolidation, so long as losses didn't widen across sectors or small caps.
Short pause. What are the immediate things listeners should watch tomorrow?
First, Treasury yields and the 10-year note. Continued decline would shift the narrative toward valuation relief for growth. Second, oil prices and any energy-related announcements. Third, fresh AI and communications headlines. Those will move tech more than the broad market. Fourth, the SPAC and speculative tape after that big SPCX move. Volume will tell the story. And finally, crypto flows, especially any renewed demand for Bitcoin, which could buoy exchange names.
Right. And if small caps widen their losses, that would be a warning sign for the market's internal health.
Totally. Widening breadth and sustained small cap weakness would signal a deeper correction rather than a narrow rotation.
Quick reactions. How would you summarize today in one line?
Tech-led pullback, SPAC flare-ups, and selective rotation into materials and utilities.
Right, and the other thing is, this pattern has happened before. Concentrated sell-offs amid macro calm. So context matters more than any single day.
Before we wrap, let's leave listeners with clear takeaways.
1. Today looked like sector-driven consolidation rather than a broad market breakdown. 2. Bond and oil moves provided a mixed backdrop, but headlines mattered most. 3. Watch yields, oil, AI/regulatory headlines, SPAC volume, and crypto flows for the next directional cues. And 4. Breadth is the key. If small caps keep lagging, the market's internal health could be at risk.
Great. Thanks for breaking that down. If you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai.
Thanks. And one last note. This is all informational, not investment advice. Analysts note the risks and data. Talk to a licensed advisor if you need tailored guidance.
That's our recap. Thanks for tuning in to Alpha Recap. We'll be back after the next session with more market color. Goodbye for now.